Good to have everyone in today's AMA today. My name is MOONSHINE and I'm the host of today's AMA with TruDeFi. We have NIEL on the mic here today and we are going to explore the different features that the project has to offer, the core product mechanics, token utility and ecosystem structure. So NIEL, could you start by introducing yourself and the team behind the project?
Yes, my name is NIEL for T-Shares. I'm one of the founders of TruDeFi.io. Myself, Daniel, also known as Token Writer on Telegram, and Executioner, and our dev team, we developed TruDeFi.io as a umbrella organization to make DeFi products. And our first product that we came out with, and it took us 2 years to develop with private development, as True2x. And so we all come from the DeFi space, and we all had different experiences over the past decades in blockchain technology, as well as understanding the role and evolution of DeFi and DeFi products. And so we wanted to do is build a DeFi system and protocol that removes the competition factor from most of the crypto interactions that we all deal with on the blockchain.
Nice. Thank you so much for that, introduction. So to start with, while I was going through your website, I saw something that piqued my interest. It says, let me try to go through it because that's where my first question will come from, that you do not change. I want to try to read directly from where I saw it. Just give me a moment. Mm-hmm. That you never change things by fighting the existing reality. To change something, build a new model that renders the existing model obsolete. So that piqued my interest. So it made me want to ask this question. What was the original problem in DeFi that TruDeFi was created to solve? And how does your platform actually address it in ways that other competitors don't?
All right. Well, one of the things is we addressed several problems in the DeFi space. Well, one was the competition thing that I mentioned. Second is introducing another token on the market is a very daunting task. In systems that have tokens, the liquidity is always an issue. You always have to have liquidity. You have to worry about people buying and selling. And how do you keep the liquidity up and provide liquidity for those who wish to come and go? And so in True2x, when we developed that, we said we're going to build a protocol that doesn't have a token, and we don't. So we use the layer one of Pulse Chain, which is Pulse, as the token of utility and function that allows users to earn a yield. So in a nutshell, what True2x does is, because it doesn't have a token, you take the layer one, you make a deposit into the protocol, and then the next step would be you deploy a miner, which allows the user then to mine Pulse from the mining pool. And then they sit and they can only earn up to a 2x. No matter how big of a deposit you make, you can only earn up to 2x in token count from the system. And then or you can leave at any time. There's no in-stake penalty, but once you hit a 2x, you can leave and you can come in again and do what you like. It's a very simple process, though the math and the technology behind it is very complicated. We solved the problem of having a token that's something that you have to worry about, and got rid of it. And so using a layer one like Pulse from Pulse Chain, it's something that everybody will always need, always have some value regardless of the market because it's needed. And it's something that we decide if we use this token, a lot of people just to double it, which keeps whales from manipulating the system as well. We can do so in a way that is equitable to all parties. So now you don't have any competition because there's no token to buy or sell or try to compete or dump on each other. It's the layer one. It's kind of its own independent price action in the market. And so we chose to do this with Pulse Chain on Pulse Chain because the fees and trading fees were very inexpensive. The building was very similar to like building on Ethereum because it's EVM fork. And it's a decentralized network, meaning that the validators are spread. There's 48,000 validators spread around the world owned by different people. So no one person can turn off the chain. You can't roll it back. and we don't have to worry about that. And chain's been completely stable and functional for over 1,000 days. So give us as developers a sense of solace and comfort that we can build and develop these things. So I hope that answers most of your question.
Yeah, it definitely did. And you kind of brought out very important points that, is needed. And I think that is one of the core structure of what your project is all about. So now that the platform doesn't have its own token, how should investors think about the value capture within TruDeFi? And how would you explain the long-term vision of your projects without token to someone that is, unfamiliar with DeFi?
Sure. So if you think about value and how value is achieved and where it comes from, with tokens and having tokens, which we have a token on another product too. So I'm not against tokens. It's just that in the system we built with TruDeFi, if you're an investor and you have to think, where is my money treated best? If you give you something of value, let's say a layer one, for something else of other value, or could be lesser, you're then taking a permanent loss risk. And that is a very uneasy feeling. Even if you provide liquidity, you always take a risk of being stuck with the other token you don't want. And so with TruDeFi, because it's only the layer one, it's only the token we're utilizing is the Pulse token. When investors come in, they know when they put their Pulse token in, say they put 1 million Pulse tokens in, they get 2 million out maximum return. And so that is a different way to think about how you understand, investment. And right now, our APRs range anywhere from 200 to 800% for those who are participating on certain days. Now, the system works differently than most staking models or mining models. We are an auction house, and so investors are bidding on shares, which are just accounting units in the system, and those shares then determine your ROI time for the day you deposit, because each day rolls over as a new day. It's because we work on a 24-hour cycle. So for investors, it's a place to work and put their tokens in their economic capital to work, and without having to worry about in permanent loss risk or trading risk. The funds sit in the contract, and all the work happens in the back end, in the background, with different other mechanisms, and yield is brought into the system to pay them, and they can realize their gains, and they can either auto compound, or they can leave.
Okay, thanks for going through that. So now you also mentioned the True to X in your earlier explanation, and I see that it's being marketed from a point of yield amplification service, and this kind of differs from the typical yield farming or staking protocols that we know in the crypto space. So could you explain what this term could mean and how it could increase the value of the True to X?
Sure, yeah. So because the system, I'll explain where the yield comes from and why. Then I'll go into that. That'll explain why this will work the way it does. If you think about any other type of farm out there, or any type of yield service or mining service, typically the thing that is emitted usually goes down in value. Whatever the reward token is, like if you're for example, on Binance, if you did some staking over there in PancakeSwap, and you got the cake token, the cake token was emitted and it went down. It goes down in value over time, just because it's free, right? Everybody takes that free money and realizes gains. Well, on True2X, we knew that was another issue, so hence no token. And so what we do is we built a system to generate yield, not only in itself but from outside, which is a key point. So what we've done is we've developed a system of mechanisms, and the thing that makes the system sustainable, and we can guarantee without any hesitation, everyone who participates will get a 2x on their investment, is what we call the SRE, or the Strategic Reserve Engine. And what that is it's a system of economic deposits that are made out into the greater DeFi space, that we take a portion of every day's deposits and invested outside of the protocol and earn real yield through service fees. So we're not trading it. We're not doing some arbitrage or anything like that. It's all yield service fees from various protocols and across multiple blockchains. Those first service fees then are come back to the system, and we buy Pulse from the market and deposit into the system. And that fresh economic capital is injected outside of any user interactions, and then thus provides steady flow of funds on top of the other funds that are in the system that are moving in and out as users come and go.
Okay, I think that explanation brings some clarity into what True2X is all about. But what external DeFi platforms or revenue sources does TruDeFi leverage to generate yield? Is this something you want to share? And how do you guys manage risk exposure?
Yeah. Okay. Yeah. So the tokens are in the contract that people participate in or locked in a contract. So there's no risk there. It's your keys, your coins, your access to your miners. So they're and the contract's been verified. It's on in the contract address is on the bottom of the D app at the bottom of the table. So anybody can look at any time and see what the balance is and what's going on and see what's coming and going. As far as the SRE goes in this external yield generation, we minimize risk because we use tools and services that have been trusted and tested, as well as that generate a lot of yield and been in the system a while. We've used emit farms on Pulse Chain, which is like the initial one that we invested in, which pays us over 100% APR in DAI through some of our interactions. We have Trufarms, which is what we developed, which is a fork of emit that is paying us almost 300% APR in DAI, which converts to Pulse. We use DexFi, which is on Base, which is a protocol that has vaults and stuff like that, and bond programs that allow us to earn yield in a way that is through on that side of things. And we know the founder over there, known him for over 10 years, and these are good guys, and we trust them and know what they're doing, and they have all their stuff, onchain, it's verifiable. So all these things is how we reduce risk and make sure that the systems and the funds that are being invested outside the True2X come back in and continually in stability. So these are the things that investors don't have to worry about when they invest, because when they buy their Pulse and they make a deposit and it sits in a contract, when it doubles, they just get it out, and it's always available, and they have their cards show up every day. Their earning yield is listed on the table. All the stats are there. It happens every day. There's nothing hidden. It's all transparent. All the interactions on the contract. So there's nothing to, there's no bait and switch or anything. It's just all there for everybody to see and verify what comes in every day, what's going out, and where they are, how much they're earning, stuff like that.
Okay. Thank you so much for the explanation. So from your website, I see that, the generated DeFi revenue would be deposited into the auction house, and you guys are going to accelerate the doubling of every position. So how are you guys going to make this sustainable? Because I see over 302 billion deposited into the total auction entries. And how is this auction done? Are there any criteria, or just explain how it works?
Sure. All right, I'll walk through the whole process and explain how it's sustainable. So a user will come in every day, any given day, and make a deposit their Pulse. And they get a little pink card that says, hey, you deposit this much. And then on the following day, because it's a 24-hour cycle, that deposit is turned to a deployable miner card. And that card tells you how much in shares that Pulse you deposited is worth. It means how much yield powered generation it has for that day. And so those shares then are allocated to that deposit, and then you can deploy that miner then to the mining pool. And so on the next day, then it's deployed and starts earning yield immediately. And you can see that what you're earning on the miner card, and you can watch it grow. And so as time goes on, that miner card, will earn more. It starts at 0 and goes up to a 2x from deposit. So if you put a million Pulse in, You start at 0, and then you'll get 2 million pulse on that card. Will be just distributed to that card in the time it takes to do so, which is unknown. We cannot guarantee that. We just know it does happen on a regular basis, and it will happen continually. Now, how this is possible, how it's sustainable, is that because the system has basically 4 things that keep the sustainability and the yield going through. Now, as you see, we have 300 billion pulses went through the system already. That's all verifiable. It's right there. And that comes in the form of users act as individuals making deposits. We have compounding. People make compound their earnings as they earn the pulse. They put it back in and make new deposits on other days. There's we have what you call system miners. These are owned by the protocol that run to a 1x. That means they break even. So they participate, they make deposits in the mining pool, but they never take profit, and they repeat over and over again. So that brings continual volume to the system and continual deposits. That's one aspect. The other aspect is we have a partner program called the Integration Amplifier. And we have different partners around the different blockchains that have a sponsored ID that users can choose to participate in and use a bonus that was generated from the system to those sponsors. The sponsors then act as any other miner or any other depositor, make deposits, and those bonuses are conferred to Pulse, and they run to the system, and they run perpetually. And they the point is that those sponsored miners, then 25% of their profits goes to buy their token off the market perpetually, and it grows bigger and bigger by 75%, called a compound rate. But further gives us more volume in the system. And then the users themselves obviously give 80% of the volume every day of all their deposits, as any other miner would. And then the 4th thing is what I said before, was the SRE, the external yield. And that comes in every day. It's been steadily growing every day since we launched. We started at about 5 million pulse a day. Now we're at over 118 million pulse a day in deposits, fresh capital coming in. And that's how it's sustainable. It goes through, and we have mechanisms that can guarantee continual volume through the system and fresh capital coming in. So as time goes on, True2X becomes less and less reliant on user capital, because the SRE will get bigger and bigger every day. And what that means is, at a point in time in probably the very near future, that the deposits from the SRE will equal or exceed user deposits, and then everything else will be near sustainable. And if, let's say, for instance, a scenario where every organic user left the system today, just left, got up and left, took their money and left, the system actually has enough energy and capital in it to continually run autonomously without any user interaction as we speak today, because the SRE is depositing enough funds that would run autonomously without any users. And the system does work in a way that rewards actually people who do. When people leave early, the system rewards those who stay with faster ROIs. So there is an incentive if people want to have they come in with, make a deposit, and they'll say 1.2 or 1.3x, and they're at 30% in up on their earnings. If they leave early, everybody else is boosted, so to speak, in the ROI time, because how the shares work. So there's mechanisms and incentives that we encourage people to say, hey, if you're already in profit, you're welcome to leave. Nobody's making you stay. And then we do have a system in place to encourage that as well. So, but TruDeFi and TruDeFi build TruDeFi not to be a quick gain thing. It is designed to be a multi-cycle yield generation tool, meaning it doesn't matter because we don't have a token, and we don't work on price. We work on token count. And because of that, the price of the L1, in this case Pulse, is irrelevant to our use case and how we work. Pulse comes in, goes at whatever price it is. It makes no difference to the protocol. And so because of that, we can run through the different cycles on both highs and lows, and it will not affect how we operate.
Really appreciate the thorough explanation about what you guys are building, and you were able to touch, different other part of the project that I also wanted to touch. And just because Excuse me. Just because you mentioned also the miner buyback program, which is something interesting, and I feel it keeps the project going. And you mentioned something like when participants leave, it even increases the ROI back to those who are still active in the system. But my question now is, the funding of the project is actually 100% founder, like I saw on your website. So when these users exit their miners early before reaching the initial deposit value at maturity, is there like a percent, like a penalty fee that is struck on what they are taking out that goes back to, the founders or the project or treasury or just something?
No. Let's say you put in 1,000,000 polls and you've earned at, say, 600,000 polls. You have not quite broke even. If you leave, it's on you. We don't take anything from you. You get whatever you have in your miner when you earn it. So if you've only earned 600,000 polls, but you put in 1,000,000, it means you're upside down 400,000 polls. But if you leave, it's your choice with what you have. So the thing is, it's a time honoring thing that if you come in, you need to at least wait till you break even before you leave. So we don't take anything extra off of you. It's on you. You made the choice, and then you have the control to leave as you see fit. But we don't have any in-state penalties or anything like that.
Okay, I just wanted to make that clear. So with that, the next aspect I'd like us to touch is the security aspect of the project. I know you kind of touched on it earlier while you were trying to explain, but investors or users always want to see the credibility and transparency of the project. So are there any companies or projects or just any organization you guys are partnered with that increases the credibility that you guys actually hear on a long term?
Well, I mentioned, DexFi on base, one of our partners we utilize. Um, in the development process, we had 2 audits, one from Avantgarde and one from SourceHat, doing the development of the contracts. And then we had the contracts been verifiable on chain as well. Emit Farms is one. Tetra on Pulse Chain is another project that we were partnered with as well. And so that's who we've been partnering with. But because we're 100% funded out of our own pockets, we built the protocol for people to use. So we brought it free to the market. It costs anybody anything, and there's no fee to use it. You just pay the gas. You make a deposit, you pay a gas fee, and that's it. And then when you get your 2x, you exit, you pay a gas fee. So we're not charging anything extra on top of that. So when you put 1,000,000 pulse in, you pay the 2 cents gas fee, and when time is up, you get your 2,000,000 pulse, you pay the 2-cent gas fee, and you leave. So it's a free to use product in that sense. In that, there's a bunch of mechanisms. Don't get me wrong. There is a distribution of when deposits are made. 80% go to the mining pool for every deposit, whether it's from a user, whether it's from a system miner, a partner miner. That is distributed into the mining pool, and 20% is distributed to fund the system miners and other mechanisms and the SRE and stuff like that. And yes, the team gets a small portion of that just for overhead costs to pay for servers and stuff like that. As far as security, also we do have Cloudflare. We have on the system to protect it from hacking and stuff like that. And our devs have got it tightened up pretty good for malicious attacks and DDoS attacks and stuff like that. So we take security very seriously, and we have everything compartmentalized where it's secure on the network.
Yeah, thank you so much. I don't know what's happening today, but Telegram is kind of lagging. So when you don't talking, I kind of get it late on my end. I tried leaving and rejoining, but it's still the same. So I just wanted to note that out in case you noticed. So thank you so much. I think what you explained is pretty straightforward. And to see that you guys actually are not charging any penalty fee. You just pay the gas fee, and when you're leaving, the same gas fee. It's really nice. It's been a while I saw a project that actually has the interest of investors at heart and not charging unnecessary on users. So another question I wanted to ask still about the integration amplifier. I feel it's actually a very nice aspect of your project too. So It sounds like a strategic partnership too. Are you guys having like maybe a means where other projects integrate with TruDeFi through this means? And are there any incentives that would be received? Is this something you guys have considered?
Yeah, that's actually the purpose of the integration amplifier. So when a partner program comes to us, we create a unique ID link and a card for them that users can see, and it's on the miner page. And when a user, any organic user, or even a project wants to participate with some of their treasury funds, wants to use True2X, they can pick that ID link and use it as a referral in their deposits. And so what happens is 5% of the shares that deposit generates is attributed to the partner. The partner then gets pulsed and it gets a miner started on his behalf. He don't have to do anything. It happens in the background automatically. And that miner goes through a process. And once it hits its 2x, 25% of its value that it earned, or 0.5x, so to speak, goes and buys a partner's token off the market. And will go into a claim contract, which is in development right now. The contract is in development for that. But it will go into a claim contract where the tokens can be either distributed to the partner's user base without any obligation of True2X. You don't have to do anything. Anybody who owns a portion of the partner's tokens can come claim their proportional share based upon the holdings, or they can be chosen to burn the tokens if it's like a partner has a mission contract, for instance. The tokens will be burned off the market. That's the partner's choice. We set it up. It don't cost anybody anything to do it. The partners, we offer it as a free service, and the partners are incentivized into basically encourage the community. Hey, when you make a deposit in True2X, use our ID link, use our number. It's up there at the top, and then we get a free bonus, and it don't cost the user anything extra. The system takes care of it itself, and so it's a way to utilize this. So, for instance, we have like DexFi. They have a link with eShare. Their emit farms, Gelato. And several others. Trufarm has our own thing, Tetra. And so there's several of these partners out there that have already started the process, and the miners are already going, accruing value. And when they get to their point, they'll start buying these tokens off the market.
Nice. And thank you so much for also bringing out you kind of touched on the referral system too. And I was able to read how you guys are going to avoid, multiple entries just to get the incentives through the automated tracking. So that was really brilliant too, because we have this, malicious users and the crypto space who want to take advantage of, referral system in a project. So thank you so much for going through that.
I will say this though, Moonshine,
Okay.
the referral system is now, the referral program has ended. It was a 45-day period only. It only lasted the first 45 days, and it's now ended. So we're in day 62 now. So that is now over. The only thing that has referrals is the integration amplifier.
Okay, thank you so much for also pointing that out. But the referral program, is this something that could also come maybe at any point in the project over time, or it's just something that has happened once and for all?
So True2X as a tool and as a technology is replicatable, meaning we are planning on moving and launching in the future, which may be your next question about for roadmap, another True2X tool using a different token as to double. And so at that point in time, we will probably start over again with a new referral program on that new True2X tool. So yes, it will come in the future. It's just a matter of when we get out and get ready. That'll be a to be determined thing and to be announced later on.
Okay, thank you so much for touching on that as well. So before I move over to questions from the community, I think the last question I have to ask is what major milestones are you guys looking at crossing over the next few weeks and months to come?
Sure. The recurrent roadmap is the farms we have. The Trufarm is going to be launched on at least two or three other blockchains in the near future. I can't say exactly when, but that's the first step of our expansion. And then the next step will be like I just said, the replication of the True2X tool technology on another chain with another token. I'm not quite sure which one yet. We're still working in the background on those details. There's some stuff happening, but we're looking at Solana, considering it. So anyway, that's the future where we're headed right now.
Okay, so is there any thing that have not been mentioned through our discussion that I just like to point out before we move over to community questions?
I mean,
Did you get me?
I don't know of anything I need to say unless you may have any questions. I mean, about the details and stuff, I can go some of these more questions about some of these details. I can answer, no problem.
Okay, guys, if you have a question, kindly signify by raising your hand so you can be unmuted. Okay, let's have Elsin. Elsin, you can go ahead with your question.
Thank you, Moonshine. Hi, Neil. So,
Hey.
From an economic modeling standpoint, I like to stress test protocols under different capital flow scenarios. So, if True2X were modeled as a closed economic system with no new deposit after a certain point, would the dividends mathematically trend towards zero? Will they stabilize or remain sustainable? And what variable in your contract logic determines that outcome?
Yes. Okay. So yes, if deposits stop or anything like that, the system, because of the SRE, because of the external funds that come in from outside the protocol into it, it makes it sustainable, regardless of really how many users come in. Now, obviously, the fewer people that participate, obviously the value goes down, but the system will continue to operate through the logics built, which is a very important thing that we had to overcome, because that's all. Because if you think about most systems are open, meaning there's an open loop. There's something that bleeds off somewhere, or you're always relying on new users coming in, and those are negative externalities in your systematic design. But when you have a closed loop like we built, and you're bringing outside fresh funds in that not only just come in daily, but they grow in size and impact, that is what gives us sustainability in the economic model. So we don't have to worry about, hey, if people fade away or lose interest, the system still runs without them.
All right, then thanks for that answer. But still, I would want to ask, is the dividend sustainability mechanically guaranteed by, the contract logic, or does it ultimately rely on continued participants' activity?
No, the system's volume we have internal mechanisms that run internally that guarantee consistent volume internally, and then the outside funds shore up the valuation and the dividend yield ultimately. So we can say we can guarantee a 2x to every participant.
All right, thank you very much for your answers.
All right, thank you so much, Elsin, for that question. Really appreciate it. So let's have Jacob. Jacob, you can go ahead with your question.
Hello, can you hear me?
Yes.
How you doing, buddy?
Doing well.
Yeah, good, man. Good to have you here. Moonshine, how you doing? Can you hear me?
Yeah,
I can hear you. I'm fine, thank you.
So, first off, I need to congratulate you guys because, your project is something that's really good to do research on, man. I really, really need to appreciate you guys. But then, what makes your reward structure, fundamentally different from high-held schemes that usually collapse in previous cycles? And then, if the model fails, are there anyone that will lose? Is it either you or the users, man?
All right. I think I heard most of that. All right. So why is it different? It's different because we close the loop. Like I said previously, the SRE brings outside capital in. So we're not relying on new users coming in. We're not relying on anybody coming in to pay the guy ahead of them and stuff like that. Think about what a Ponzi is. The definition of a Ponzi is, person A comes in, and person B pays person A, and the third person pays the first two people, right, and stuff like that. If that's all anything was, which a lot of things are out there in crypto, that's just a straight up Ponzi. But most things are Ponzi's, even our tax structure, governments, Social Security, wherever you're from. I mean, it's all a Ponzi and it's all hopium. We had to get rid of that aspect. That's not sustainable, obviously. So the SRE is the solution. It closes the loop, bringing fresh capital in, and that's what makes it sustainable throughout time. So we don't have to worry about new people coming in. That's why we're different, because we bring funds in outside of our users, outside of our own protocols funds. It's fresh capital.
Yeah, thank you so much. Thank you so much, man. Really appreciate the question. Well, I think we'll extend some privilege to others
Yeah, thank you
for.
so much.
Thank you so much.
Okay, thank you so much, Jacob, for asking that question. So let's have Jeremy. Jeremy, you can go ahead with your question.
Hi,
Hey,
can you
Jeremy.
hear me? Hi,
Yes.
nice to meet you again. Love the projects, love the build up and the answers you answered through Moonshine. Talks a lot about the project and I really love it. So basically, my question is based on your 2x model. I just want to know, based on that, the project is saying that the 2x is a liability to the protocol. Every unfulfilled 2x is kind of a liability to the protocol and things like that. I just want to know, is let's just say, for instance, someone has unfulfilled 2x allocation from early exits, and it maybe versus is not able to reach is the potential. What impact does that have on the dividend distribution? And does it have any issues with the treasury traceability, or does it have any kind of risks that we can be aware of?
No. All right. So how it works is when a person is mining their pulse, no matter what day they're in, every day group, that is every person on every day who participated in the past and current days, all get a distribution. So there's never ever be a time that a day doesn't ever get paid. Every day will always get paid their proportional share of the distribution of the funds. So there's no risk or any possibility of any day group or any person not receiving yield every day. So that's impossible. The contract is designed to do that. And every share that every person has, no matter what day they're in, is treated equally by the contract. So when tokens are distributed, the shares are treated equally. And then the more shares you have, obviously on any given day, the more of the yield you get for that day and your deposit.
Okay, that's nice. So does this distribution favors early compounding users, or does it like create a feedback loop that early participants who's not able to earn to that 2x, can they be effectively disadvantaged?
All right. So I think I understood you right. There's really no benefit, or if you can look, you can see on our chart, there's really been no benefit for being really early or really heavy in your deposits. In fact, if you look at how the system is working, you look at the X factors and the yields generated, what is the better use case is a slow DCA into the system, meaning people have, let's say you have $200 worth of tokens. If you put in, say, $50 over 4 days, you have a better share rate. And so it doesn't matter which day you get in True2X. It's not about early gets paid better or faster. It's just about time. So whenever you get in, and whatever day it is, whether it's you got in on day 1 or you got in on day 20, if you look at the ROIs, day 20 is actually earning faster than day 1 because the share rate was different. So the days themselves don't matter. It's a matter of just DCAing in, because at this point in time in the system, the average ROI time will be whatever it is. And we have not even hit that point yet. But day 20 is at a 1.6, 3x right now. So it means they're up 60% on their deposit already on day 20. It's now day 62. So it's in 40 days, they've made 1.6x on their deposit, right? In yield. So that's a pretty fast APR. I think it's like a 700 or 800%. And so we say in another 40 days or 30 days, a 2x, and they're out. So in their case, they've been 60 days. They doubled their token count. Now, the question you have to ask yourselves is, if we're doing that with this in the bear market, as rough as it is, as tough as it is right now for everybody, all the chains, if we can provide our users within 60, say, even if it took 100 days to double your tokens, would that be worth it? Can you do that anywhere else and double your bags? And that's the proposition we give into everyone with True2X is, look, even if it took a whole year, 365 days to double your tokens, that's still better ROI than almost anything else out there in the system, because there's no impermanent loss risk or trading risk. You put the tokens in, you get double the tokens out. And that's what we're trying to explain, that this is a powerful system. And because of the SRE and the closed loop and all, the risk of losing your money and all that stuff is all gone, because we have fresh funds coming in every day. And as time goes on, the system only gets more powerful in that aspect. And so there is no benefit being early or anything like that, just because the system just does what it does. So no matter what day you get in, you're going to be treated just like everybody else in form of yield and distribution.
Yeah, that's actually nice to hear from you. I think I understand what you explained, and I think it's a very nice system to work on, because if someone wants to put in on day 1 or day 20, it's still the same X that you receive, and because you said something about day 1 and day 20 being faster, something like that. I think I heard you say that. And for those who are either early or late, something like that, can still get their 2x and be part of the journey, whether late or early. So I understand that. I appreciate the answer, and I think I will look forward to joining in and put 1 or 2 bags in there to see how it goes. So I appreciate it. Thank you very much.
Yeah, and we tell people, look, don't go all in. Try it and test it out. Learn how it works. Try a little bit and see what happens. Do a little bit at a time. Watch the math. The table's there. All the information's there for you to see where you are and how you're earning and how fast you're earning. And that's what you need to do. And then think about it like that. And then if you decide, well, I like what I'm earning, I may want to compound. And what all compounding does is make you earn in the net faster ROI, as well as get better share rates on other days.
Yeah, I'll definitely get your advice done, and I'll check it out. Don't put too much, but I'll put what I can afford to lose or something like that. But as you say, there's no loss, and I think yes, it's something that's very nice for the community and people in the Web3 to enjoy. So yeah, I think this will go for it. I appreciate the answer, and kudos to you guys.
Yeah, thank you so much, Jeremy, for that question. I think the question also made us see the point that the project is all about fairness among every investor or user or participant. So this creates transparency. So thank you so much for that question. Let me just get in one question from the chat here. Just give me a moment. So I think we've gone over all those questions. So I think with that, we've gotten enough questions for today. So do you have any final words you'd like to give before I close down the VC?
So yeah, I would say that, what True2X is the DeFi service protocol designed to be a multi-cycle yield generating tool. That's what it is. It's designed for. There's no token to purchase. There was no VC money, no IPO. It's completely self-funded by the team. We are interested in DeFi itself, and it is a non-PvP. There's no competition, no trading. It is just strictly a service tool for users to use as they see fit. We have our own farm as well that helps support the system through yield generation called Trufarms at trufarms.io, and it helps as well. And it pays out a little different thing, but it is a farm, but it pays an EDI for single site staking too. So it's a secondary product that we use and utilize. So people who maybe weren't interested in that, like provide liquidity, want to play around with that, it's available as well. But that's pretty much it. We appreciate the questions. Are very, very thought provoking. I mean, y'all really thinking and looking at the systems, which is good. We are different. We are new, and what we built and with True2X is a brand new invention in DeFi. There's nothing else like us. We know that because we couldn't find anything like us. We looked, and because we don't want to just duplicate somebody else's work. And when we built this stuff and took over 2 years of development and code building to build this tech, that's why it's different than everything else, because there's nothing else like it. So we can't be compared to anything. We have inspirational concepts, like the concept of auction house model is not unique to us, but how we solve some problems is a big deal. So with no token to buy and no whale games, we have limits on how much you can deposit each day, and globally there's a limit of 1 billion pulse per wallet. There's a limit of 25 billion pulse per day can come in the system max. We try to set the system up to work in a very even-handed and equitable way for all users. So everybody makes a deposit. No matter what day you get in, you will be guaranteed to get your 2x based upon the system's designs and functions. I appreciate y'all having me today.
Yeah, you too. Have a good day here, and definitely rooting for you guys. So guys, ensure to follow them on Telegram, join their socials, because that is where you get updates about the project. So thank you all for joining today's AMA. It was really a great section with you, Neil. Everything you explained was pretty straightforward and clear. I didn't sense anything shady. So, but still, guys, this is not financial advice. Do your own research and definitely check out their website. Their website is very explanatory, so you definitely get all the answers you want. And if you don't, head to their Telegram channel and ask whatever question. I'm sure Neil would always be open to answer your questions. So thank you all. Have a great day.
All right, thank you all.